Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances so that you can apply those lessons to your own life. I'm your host, Ismail Humet. In this episode, we are joined by Thomas Watts, co-founder of the Financial Cloud. We cover a lot of ground in this conversation, from Thomas starting a video game accessory business in school, to beating cancer, to beating Wall Street. What's the story behind starting the Financial Cloud, an online trading community powered by algorithms and AI? How does a 23-year-old consistently generate market-beating returns? And how can you do the same? Let's dive in. Thomas, thanks for coming on the show, man. Happy to have you here.
Yeah, I appreciate it. Thanks for allowing me to come on.
So I'm curious, how old are you again?
So I'm 23, about to turn 24 in March.
And I think you're pretty much exactly what we try to uncover on this show, right? It's young people who have overcome so much and have had so much success at a young age. You just seem like destined. You're bound to be rich. That's exactly what the podcast is all about. So I'm excited to unpack this and dive in. I'm curious, if you don't mind starting right in the beginning, like, why did you get so interested in stocks at a young age?
Yeah, definitely. That's a good question, actually. So I remember as a young age always having an interest in business. And so probably right around 13, 14 years old, I was just got a brand new iPhone and I pulled it open. And back in the olden days, and I think they still have the app, but they have the regular stocks app. And I don't know how many people still use it, but I pulled it open and it just had a bunch of random stocks on there. And I asked my dad, I was like, hey, can we buy one and let me watch it? And so I watched it and he kind of explained what it was, what happened with it, what's the point of a stock, and you're owning equity in a company. And the funniest thing was it's Yahoo. And it was like $13 at the time, $13 or $14. And so obviously we know where that went, and it's no longer publicly traded, and it got bought out, for less than what it's worth now. But it was just interesting to me to see how you can let your money work for itself and not the other way around, and spending your life as a 9 to 5. So that always intrigued me at a young age. And then I guess I can just kind of dive right into this. The point is, when I turned 16, two of my cousins, actually, we decided to start a little business. And so it's a little bit different than what a lot of people had, but I felt like we were a little ahead of our time in the sense of the whole Amazon reselling nowadays. And so what we would do is the business was called Thumb Grips, and we would buy, a package of 20 or 30 of these grips that would go on like Xbox controllers, PS4 controllers, and they were like real cheap to make. They were like 99 cents a pair is what we got them for. And we sell them for $5 or $6. I mean, we're 16-year-olds. I mean, we're mailing them out ourselves. We got the whole business operation going at my cousin's house. I'd go over there after school in days and we'd package order and fill them. It was definitely a unique entrepreneurial spirit that we had. But obviously, we got around $2,000 to $3,000 in sales, and it got to the point where we were just trying to enjoy life and be a kid at 16, 17 years old. And necessarily, we weren't the best in the business. Obviously, didn't have the marketing, didn't have the know-how, didn't have the knowledge of these industry powerhouses that are there now, like Control Freak and things like that. But again, I think we were ahead of our time in that too, because now a couple of years ago, 2 or 3 years ago, when I was 20, 21, they were hitting off big with Control Freak, and they were getting sponsorships. And so definitely one of those ahead of your moments, or ahead of your time moments, which was very interesting for us. But that we just always had the entrepreneurial spirit, and it was definitely nice to have some people around you to guide you and help you too.
You'd be surprised how common stories like that are, like where people I interview on the show were doing things in school, selling things in school. And I think it's when you look back, it's easy to spot the entrepreneurs in school in hindsight. I want to dig into that a little bit more, but before I do, I just want to make sure I ask this question, because you said, like, was your dad in the financial world? What did he do? Like, why did the stocks come up between you and him? Did he have a background in it?
No, I wouldn't necessarily say the background. I know he's always financially, he just is financially aware and responsible in that way. And that's mostly where I learned, invest in yourself, invest in the future. He built houses right up until the '08 bubble, and then got out at the perfect time. And then now he's dealing with sales and operations at a medium-sized business. And so he has that business acumen there, and he has the knowledge and know-how. And I think he just kind of instilled that into me at a young age.
Awesome. So the Thumb Grips enterprise that you started with your cousins, you said you only made like a couple of $1,000s, but I think at that age, that's a good chunk of money.
Yeah, we thought we were on top of the world selling $3,000 in revenue. Obviously, we we garnered, 3 or 4 thousand followers on Twitter at the time, which we felt like we were on top of the world. Like I said, we had, these followers. We were trying to sponsor people. We say, hey, can I send you a pair of these grips? And you just kind of post about it on social media. And so we had everything up and going. We had my uncle, his name is Uncle BJ, and he literally had all the business aspect. Like he was taking care of, if we had to have any taxes, if we had to do this, the business name, the website. And he was a tech guy. And so he took care of the website. And so it was a legitimate business at 16. It was just very interesting to see how everybody used their skill set to come together and just fulfill this entrepreneurial spirit that we had. But like I said, eventually it kind of faltered off when you want to be a kid. But
Well, that's what I was going to ask next. If you picture people at that age, everyone's kind of like playing baseball or playing basketball, talking about video games. What was different about you and your cousins where you guys were thinking about, let's start a business? Like now it's more common with Shark Tank and all this stuff, but back then it wasn't as common.
yeah, definitely. One of the biggest things actually was we actually played baseball growing up together. We would spend hours on practice. They played at a high school 20 or 30 minutes from me. And so we played baseball together. I eventually quit. They quit. And then I think this was right around the time we were actually doing that, 15 or 16 years old. So it got a lot, honestly. It became just too much with school and everything. That was probably another reason we closed it down. But yeah, I think we've always been different. I know for myself, I never really fit in school. Wasn't the most popular. But didn't really care about that stuff. I just kind of was looking towards the future, looking to work, looking to own my own business. And so I've always had that, like, I guess, in me, and not necessarily a bad thing to not be popular or to not be the best thing. But I've always, I started reading finance and business books at a young age and just kind of trying to garner myself knowledge and just like teaching myself off YouTube videos and books and how to's. And that's really where I learned most of my knowledge that I have now.
So I usually get into that at the end of the episodes, but since you brought it up, I'd love to dive into that. Like that's also a very common thing where people feel different, right? When you're studying, listening to podcasts or reading books, starting businesses, you kind of stand out. You're not like all the other kids in school, all the other kids in your neighborhood. Have you ever thought about why you were like that? Or are there any like specific examples or stories about you not fitting in or you being different? Like, for example, the story of you starting this thumb grips thing is one example. A lot of kids don't do that. That immediately makes it stand out. Is there any other things like that that would say that you were different or you felt different, you didn't fit in?
Yeah. I mean, I think from a young age, I knew that I didn't fit in just in normal life, right? I had three sisters growing up. I lived with two of them. And they were Miss Dancer, they were Miss Cheerleader, they were that in that atmosphere. I was never fitting in at that point. I never really cared for that, never really fit in. I tried for a while, but then I got to a point I was like, I really don't care what people think of me. I'm just going to become the best I can. And I think with the John Tay episode right before this, he made a good point that I related to. It was that if you can just get better at something every single day, even if it's 1%, you're gonna over time that's going to compound. You'll become better and better and better, and you got to feel more productive every single day. So whether that's books, whether that's whatever you're doing, even if you enjoy yourself with video games, like I love video games, but I try and do something productive every day. Whether that's learning, more financial skills, or just something random every day. So yeah, I would definitely say that I definitely did not fit in, but there was always something different about me.
So if you're open to discussing it, I know that you've battled cancer. So can you, whatever you're open to getting into, but I'm more curious about how did that change you? Because a lot of times, like we all go through our own obstacles, right? Everyone's got their own barriers and obstacles that they go through. And I find that every successful person has obstacles. They have barriers. And it seems to make them better in a way. Like you wouldn't wish for those things to happen, but in some weird way, like John Tay talked about his injury in the previous episode. And if he didn't get injured and he wasn't like bedridden, he may not have gotten into stocks, right? So it's not like you wish for them to happen, but oftentimes it leads to improvement or other good things. So I'm just curious, whatever you feel like getting into, how did it change you for the better? Or was there anything that you took from that experience that helps you in whatever you're doing now?
Yeah, it definitely did. So I actually just a rough rundown on the cancer story. I was a junior in college, actually, and just enjoying a fall. It was in the fall, roughly around September, October. Went on a mission trip to Texas and was out there just kind of helping people with yard work. And I started getting real like faint, like real lightheaded and not really feeling like myself. And I took like a 6 hour power nap. Well, when I woke up, I got back in bed and slept for another 12 hours overnight and just kind of kept getting lightheaded and dizzy. We'll come back, run a bunch of tests. Eventually, we didn't know what it was for months on months and months. Finally, in December of 2017, got diagnosed with stage 3 classical Hodgkin's lymphoma. And so that was definitely a blow. I wasn't really never worried about it to begin with. I think what scared me more was not knowing what it was. I think people in general have more of a fear of the unknown than the known. And I'm one of those, in the sense of like, hey, I don't know what the heck's out there. I don't know what's in front of me. I don't know what's coming, but I'm comfortable where I'm at. And so I challenge myself to not be scared, not be fearful. Now, obviously, you get in that point, your life's on the line, something can happen. You don't know if you're going to make it or not, but definitely going through chemo and going through being in that atmosphere definitely does change you on the inside from every perspective, right? If you ask any of my friends beforehand, hey, do you like Thomas? Is he cool? Is he nice? A lot of them say like, yeah, he's all right, he's cool, but he can be mean sometimes. He can be upset with you. He can do all these other things, and but eventually after that, the whole cancer thing, the whole chemo, kind of changed my mind, my perspective, and my heart and my soul really, and it really gave me a new perspective on life. And I kind of looked out and said, look, I want to be a better human being in this life. I only have one life to live. And I think I read a quote the other day from Naval on Twitter, and it said, every person has two lives, and the second one begins when he realizes he only has one. And that's at that moment I knew. I said, okay, I'm gonna be a better person. And honestly, I just got married back in January, and I don't think I would have met my wife. I don't think we would have dated. I don't think we would have gotten married if it had not been for cancer. And there's a lot of other things I can say about that, but there's just something about going through a process that breaks you down mentally, physically, and emotionally in a specific part by part or piece by piece process. And when you get built back up, and whatever that is, if it's faith, if it's something you cling to, family or loved ones, whatever it is, and mine's faith, I clung to God, I clung to Jesus and said, look, this is all you, God. And he kind of took it from there. And yeah, so after 4 chemos, I was actually in remission, actually. So I was very thankful for that and grateful. And that definitely changed my mind from there on out. I actually had chemo on my 21st birthday, which was always not the funnest. It was definitely not the most fun at all, and being surrounded by needles and drugs on your birthday. But I knew that God had destined me for bigger things. And so I started thinking, what could I do? What could I do? And I knew I was destined for greater things down the line. And then obviously we can get into later. I mean, the companies I've started and where I'm at now, but I really don't think I'm successful yet. I don't think you'll ever reach successful, because successful is such a subjective meaning that you really can't objectify it.
To me, it's such a fascinating thing, man. Like you kind of alluded to, oh, you wouldn't have met your wife if it wasn't for that experience. And I feel like whether it was Jonte with getting injured and getting into stock, like it just seems to be such a common thing where I don't know, man. Like, I guess you believe in fate, right? Do you believe in fate? Do you feel like you're kind of in a way? It's weird to be grateful. I guess I don't know where I'm going with this. I don't know if it's a gratitude for that happening, uh, or just acknowledging that hey, some good comes out of this. It's kind of like that blog post that you wrote about. Was it the bend in the road? I think it was. If you want to elaborate on that a little bit for people to understand.
Yeah. So for some preface, I when I was undergoing chemo and cancer, obviously you never know if you're going to make it or not. I didn't know. I had a pretty good survival chance, around 80%, depending upon what stage it was and how bad it was. And I was one of the lucky ones and blessed ones that actually was able to overcome it. And my heart goes out to everyone that has been affected by cancer. I can definitely relate on a personal level. But yeah, so bend to the roads, basically just navigating the bends in your life. Obviously everything's not going to go from point A to point B in a straight line. There's going to be things thrown in. There's going to be health hazards. There's going to be losses of job stability. There's going to be financial troubles, losses of loved one. There's going to be something thrown in your life. And it's how you navigate these bends in your roads that's going to navigate how well you can drive the rest of your life. And so it makes the scenery more beautiful when you have bends. It makes it more beautiful in the terms of life when you have these struggles and these setbacks, because it builds you up to be a better person, to overcome stronger things and more difficult things in your future.
So I know for a fact that there's people listening to this that either are personally dealing with a health problem or have someone that is close to them in their life that's dealing with something. Before we move on from this topic, do you have any advice for people, whether they're going through it or they have a loved one going through it, on how to, um, I guess, how to treat them or act around them, or the people themselves that are going through something? Is there any advice from your experience? Because it sounds like you kind of got to the other side. So any wisdom that you'd share?
I think the biggest thing for me is, I know as a person that had cancer, and I don't mean this in any light way. For me, I think the hardest thing as a person that is always the spotlight's always on them. I think it's also even more harder for the family, right? I saw my parents sit there and come to every single chemo that I had and sit there and watch me. And I think it hurt me more to watch them see me in pain. And because I knew I could take it. And a lot of people that go through chemo, it's painful, especially when you get into radiation. There's a lot of painful things that necessarily we have nothing better yet. And they're doing some research on like stem cell and other things. But when it comes down to it, it's a painful experience, and emotionally, physically, like there's scarring in your soul, on your body. And so it definitely is a mental roadblock. But I think one of the biggest things I can say is you have to keep pushing. A lot of people want to get to the point of where they'll just dig deep, 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 and then they'll stop. But what they don't realize is if they would have kept digging for an extra minute or two or an extra day or two, they would have been at the end. They would have reached this point of where they knew they could have struggled. They knew that they could have beat it. They knew that they could have gotten through that roadblock. So I think the biggest thing is just saying, hey, you need to keep pushing. You have to dig deep, find yourself, and ultimately rely on whatever your faith. Mine's faith, obviously God. But if you have something there to lean on, a loved one or a family member or God, that's where you need to turn.
Yeah, this kind of reminds me of this story that I'm probably going to butcher. I don't remember it exactly. Maybe you heard this kind of. It was I think a general who was a prisoner of war, and he talked about something he observed. If I find this story, I'm going to put it in the show notes. But he found something that he observed with his fellow soldiers that got taken as prisoners in war. It was the people that were optimists that ended up losing their minds quicker, because they always think like, hey, it's almost Christmas. We'll be rescued by Christmas. And then when Christmas came and they weren't rescued, they got into depression. And then they do it again. Oh, it's going to be New Year's. We'll get it out by New Year's. And again, that mind game really messed with them. And he found that the people that were realists were the ones that lasted, where, like you just kind of said, you just dig in and you go to battle. And however long it takes, you can take it. Those are the kinds of people that end up making it through versus the people who are optimists and just think it's going to be over this next time. I probably butchered that story. I don't know if you've heard that before, but I'm going to see if I can find the story, put it in the show notes.
Yeah, I believe I've heard it before, and it's ironic, or not ironic. It's actually funny you say that, because you ask any of my friends, you ask my wife, I'm not known to be an optimist at all. I'm very real. I'm very pragmatist. I will tell you like it is to your face. Not afraid of conflict. I'll say what's on my heart and what's on my mind, and I'm not going to be afraid. Like if I think something's going to go wrong, I'm going to tell you. And I think I wouldn't say that's a defining quality. It's just something that's very different than the norm, right? You have somebody that might be super optimistic, super upbeat, and then here I come and here I am just being honest with you, saying, I see a flaw in this or I see this. And I don't mean to be that way. It's just how I'm built and how I'm wired.
Yeah, I'm similar, and I found that to work very well for me. Even when I was working in the corporate world, I found that people were afraid to be honest, and they would come to me and say, "Hey, can you tell this to the boss? Can you tell this to the boss?" And the managers appreciated me more because I was very direct with them, as opposed to being political and dancing around issues. So I find that it helps in the long run. But before we move on from this, how's your health now? How's everything going now?
Everything's good, complete remission. Been in remission for a few years now. I was declared cancer free in February of 2018. And so we're coming up actually right now on 3 years, I believe now, cancer free. So everything's good, and just blessed to be alive.
Awesome, man. I mean, it sounds like you went from beating cancer to beating Wall Street. So we'll, before, maybe that'll be the title of the episode. But before we get into that, I think there was another part of your story. I don't know how this ties in. Like once you got healthy, what happened? You started a clothing line at some point. So how did that tie into once you were done and healthy?
It actually has to do with cancer. So it was called 5 and 2 Clothing, and so it actually dealt with cancer. As we donated a portion of our profits to cancer research, and so that really gave me the inspiration to start it. Now, obviously, I think both of us know at that point in time, I just wanted to own a business. I enjoyed the hustle. I enjoyed telling people, "Hey, I got this product. I got this, this, this." It was never about the money. It's almost never about the money. I mean, it's about the freedom that you get from owning your own business. You can work when you want, how you want, and who you want with. And so starting this, obviously I knew it was a crowded industry. It's the apparel industry. It's one of the most heavily crowded industries in probably the entire world. You have, I mean, Nike, if you want to go into athletic type things, you have Gap, you have Ralph Lauren, you have Polo. I mean, you have all these different brands that are there. But I really saw an opening in the Christian apparel brand. And that's, I'm a Christian. I'm not afraid to say it, but there are subsects of Christian that you can kind of get into in Christianity. And I saw it and I was like, okay, let me take my shot. I drew up a business plan. I said, this is it. It's called 5 and 2. It was the 5 loaves of bread and 2 fish in the Bible. And when I laid it out to all my friends, like, oh, this is awesome. You should do it. So my biggest hurdle was designs. I had no idea how to design. So being myself, and I was like, okay, I'm going to do this. Instead of paying somebody to do this, $150 for one logo, I started YouTubing how to use Photoshop. And I had delved, I dabbled in it a few years ago with the thumb grips, doing some Twitter promotions when I was like 16, 17. So I knew a little bit. But when I started coming up with designs, everybody's like, man, this is awesome. And so, we sold roughly around $2,000 or $3,000 again. Not a lot, just enough to make a little bit of profit. But other than that, it was really about the hustle, the grind, and having some friends around me and having a true brand to stand behind and say, look, I'm community, or I'm basically contributing to society in a sense of giving back to cancer research, which has affected me so near and dear to my heart, but also providing the economic stability that I wanted, or extra side income, I guess you could say, to be able to do things I wanted.
Were you also working a job at any point along this time?
Yes. So 5 and 2 was actually started a little bit after I got a full-time job. So I started a full-time job in May of 2019. I graduated in early May, and then 2 weeks after I graduated, I started my full-time job. And so I work at a bank. I worked at a bank in investment portfolio analytics, and so yeah.
So you got a finance degree, you had a job in finance, and I assume, like, maybe I'm wrong, were you like studying trading all this time? Were you learning about the markets kind of in the background? Like, how did you go from all the stuff we just talked about into getting really more into trading?
It's actually a funny story. I think in Jonte's episode, I know we keep referencing that, so I think to even listen to this podcast, you're going to have to go back and listen to that one. But Jonte mentioned that there were these Discord groups, and I think they've got a lot of publicity now with these trading groups, whether it's Reddit, Discord, Twitter, anything like that. Well, I was a part of this before it was this huge, big deal. I was back in 2018, actually, after while I was going through chemo, actually, at school. I could have taken a withdrawal, left school, finished a year later. I was like, no, I want to push through. My mom really pushed me and said, let's just get it through. I think you can do this. And so it really did give me something else to think about. It took my mind off cancer, it took my mind off chemo. When you really, I think chemo is a big thing about, or even cancer just in general, you want to push it to the back of your head. You don't want to think about that. You want to put something else in the forefront, because if you don't have something else to focus on, then your mind's always going to be on like, oh my gosh, am I dying? Is this the last time I'm going to show up here? Those type of thoughts. And so I definitely started looking into trading. I found a Discord group. I'd always been interested in stocks, but I didn't really know. And then being the person I am, I went on YouTube, went on articles. What is options trading? What is equity trading? What is a short sale? What is cash balance? What's a margin account? What's a Roth IRA? Just starting to do a ton of stuff. And obviously I learned some of this stuff as a finance degree, obviously, but I'm just getting into those higher level courses. And I actually started trading probably around, March or April of 2018, right in the midst of chemo. But I had plenty of time to do it. I was sitting in a chair for 3 or 4 hours every other Wednesday doing chemo. And so it gave me plenty of time to look at stocks, kind of talk to other traders and see what they were doing. And then again, I think it just propelled from there. I just had a passion for it and said, man, my hobby can make money. Not a lot of other people can say that about their hobbies. And like, you have a potential to make this extra cash or this extra little side income. And so it's definitely been a blessing to me just to have something to put your passion towards and have something that you're truly passionate about and that you could see yourself doing for the rest of your life.
As someone who is in these Discord groups, I'm just always been curious. Like, I think Ace Ventures is like 60,000, 70,000 people. And you guys have the Financial Cloud one now too, with thousands of people as well. How do you, like, as someone in there seeing all these experienced traders commenting, how did you get to be in that role? Like, does someone see you tweeting about charts and stuff and say, hey, this guy knows what he's talking about? Is it because someone referred you? Like, how do you get to be in that role that everyone's seeing what you recommend, what you post?
Yeah. So actually the first group I was in it was one of the groups that Danny, who's the owner of Ace Ventures, was in. And he was actually like the head of options trading in that group. And so I hit him up one day. I said, hey, man, if you ever need another, mod is what they were called, or another experienced trader, let me know. And he's like, okay, well, what do you do? And I was like, man, what do I do? And then I figured out you have to have a specialization, right? If you go look at any of these groups, they have swing traders, they have day traders, they have scalpers, they have macroeconomic analysts. I was trying to figure out what the heck I was going to be. And I didn't know TA, I didn't know technical analysis at that point that well. I knew it a little bit, but I didn't know it that well. And so what I did know was a lot about was economics. And I was in the midst of like an intermediate macroeconomics course. So I said, oh, I can talk about economics. And so he's like, okay. And then he added me as a mod and he was like, give me a weekly update. And so for every week I'd post in like, hey, we have GDP this week. We have initial jobless claims. Watch out for this. If non-farm payrolls drop below their average estimate, the stock market could fall. You can look at maybe the unemployment rate. You can look at the way the US dollars affecting the currency and Forex markets, which in relative affects the stock market. And so that's really how I got into there. And then the more and more I got into that, I said, okay, I probably need to learn the ins and outs of technical analysis. And so learning chart formations, learning pennants, bull flags, all of that stuff came later. But you really have to find an in if you're going to try and get into one of these groups, I guess.
It's crazy because growing up, maybe I'm getting old, but I don't remember a lot of young people like that passionate about this stuff that they're in these Discord groups and like typing free analyses up for like thousands of people to follow. It's just a different era that we're in, it's great that younger people are getting into this stuff now. I think it's awesome. But why did you find it to be worth it? I assume, like many of these online groups and forums, like there's not really a financial incentive, or at least not a big one. Why was it worth it for you to type up these reports every week and like put work in?
Yeah, and let me preface something. So I think the era of traders now is completely different from the era of traders I was when I grew up, or I guess in 2018, 2019, because back when we were doing it, there was no gambling is what I would say is now, right? You have all of these TikToks. TikTok is basically taken finance to a new level on a sense of these Generation Z millennials. My generation, all these younger kids, probably from 13 to 25, 26, 27, the TikTok is their market. And so when people are posting, hey, you can do a $100 call debit spread on Tesla to make, $27,000. I mean, yeah, technically it's possible, but to me, that's more of gambling, and you're not taking a theoretical, systematic approach on your risk management. You're not just throwing money in random places and hoping it works out. So I think for me, it was more of I wanted to learn the ins and outs of the stock market, and there was no better way than being involved with traders day in and day out on these groups and talking and asking, hey, what do you think about GE earnings? What do you think about Apple earnings? What do you think about Tesla earnings? And again, this is pre-Tesla hype. This is Tesla at $150 a share pre-split too. So that's probably like 4 or 5, it'd probably be $4 or $5 what it would be now after split. So anyways, I think it's just, there's a difference in the two, right? So I think gambling is now what I would prefer it to be called, because a lot of these groups are just pushing, hey, follow what I say. And a lot of people just want alerts. Honestly, people just say, hey, tell me what to buy, tell me when to sell. I'm going to get in, get out, make my cash. Thank you. They never want to think for themselves. And so that's what, one of the things that Tom and me and Jonte have basically started in, I guess, in the financial cloud, was we wanted to push independent thinkers, but shared success. We wanted people to think for themselves, trade for themselves, learn the ins and outs of the system, learn how it works, learn what technical analysis, how to couple it with other things in the stock market to actually make a systematic approach and say, I can consistently make money. Even if I lose something, the risk to reward ratio basically says I'm going to make money 9 times out of 10 if I keep this system.
So I'm like you, where I find myself to be better at like the macro picture and see where things are going at a big level. That's my background was more of a value investor, more fundamentals. I've been investing for a long time, and just in the last year or so, I got into trading and options and stuff like that. I just saw there's an opportunity now to make. I don't want to say easy money, but easier than it's been if you apply the proper risk management and you do it the right way, not go crazy. You can, like, I remember when it was like making 15% a year was considered amazing. And now you can do that a lot quicker, like a week, and not take a significant amount of risk. So
Yeah.
if you keep that mindset in mind and don't go crazy, you can make a lot of money in this current environment.
I mean, it doesn't take a genius to figure out that if you bought any stock on the March and April dip, you'd be up 60, 70, 80, 90% right now, right? You go look at Peloton in March. You go look at Apple. You go look at Tesla, for all that matter. You buy any real stock besides maybe a few of the K-shaped recoveries. So like maybe a little bit of airlines, any type of retail, any type of that. If you bought any good quality stock, a high growth stock, you're up 100%. And so all these gurus that are out there saying, oh, look at me, I made, 90% returns in the market this year. I mean, well, so did like 98% of other traders. If you just bought and hold, if you didn't sell in March, you're probably up more than you were obviously back in March. Obviously, you see the SPY or S&P is higher than it was in March. So I think specialties now have kind of shifted from, hey, let's be theoretical, or let's be systematic about our approaches to trading, instead of it's now, okay, well, let's just take it day by day. Let's just throw $100 at Tesla here, $100 at Apple here. Let's play earnings. Let's just take a random gamble. And so I do think it's turning into gambling, and I think it's going to be a negative feedback loop, in the sense of all these people are just signing up for these Discord groups, and this one person calling out alerts saying, hey, buy this, buy that. And then I think even with the Wall Street Bets thing blowing up now, I think we're going to see more and more pump and dump schemes if nothing's done about that. So I don't think the Wall Street Bets Reddit Discord was in any fault of their own, any legal matter. But when you have Discords that it's one person pumping $100 million small cap, then you start getting into the problem of that's a technical pump and dump. And it's meaning pump and dump, if anybody doesn't know, it's essentially someone shouting out a stock saying, hey, buy this stock, for no other reason than them just saying it's worth it. And they've already bought in. So when everybody else buys in, it drives the share price out. Then the person who called it out dumps their shares at a higher price, makes a profit. Everybody else is left bag holding. So I think that's really where it's going right now. But I think specialty, obviously, I think this market is like Tay said, the technical analysis is probably 90% of it right now. A momentum runners can just keep running and running and running. And you go on Wall Street, probably like majority of the hedge funds, I guarantee you go to a hedge fund, they have at least one strategy there that's working on momentum, if not two or three. So, I mean, it's obviously not just a retail investor pushing this momentum. It's a Wall Street Fed run and rally, but eventually it's going to end. There's going to come a point to where the greatest bull run of history, besides, the dot-com bubble in 99, 01, and 02, is eventually going to come to an end.
Yeah, I mean, I don't think any logical person would argue against you that it's like not even rational anymore, the valuations and where things are going. I mean, I guess you could argue, you probably know more about this, where the stocks are valued like on discounted cash flows, and if interest rates are low and you're discounting cash flows, obviously with lower rates, the value of the company is going to be much higher. So maybe there is some logic somewhere, but what are people supposed to do when this is what's going on in the market? Like just tune out and cash out and wait for it to get more rational, or try to ride the wave and take a piece along the way? I don't know. It seems like everyone's trying to take a piece along the way.
Yeah, I think a lot of people are just trying to trade here and there. So, I mean, I have my long-term accounts, and I think most people do. And I'm advising you, if you're not within 5 or 6 years of retirement, you're fine. Just leave it. Don't even touch it. Your emotions will get involved. You're going to make irrational decisions. You're not going to know what the heck's going on. You're going to think that you know more about the market than the market knows about the market. And that's not true. I don't care who you are. You can't time the market. And I think Warren Buffett had a great quote that I'm always going to say is time in the market is better than timing the market. And so using that, I've always just said, just leave my money in. I don't care if it goes down 30, 40%. It's going to bounce back. This is America. And the day that American stocks don't bounce back is probably the day that the constitutional republic dies. And I don't mean that in any bad way, but that's just usually how it works. Our recessions are almost always followed by just these grand expansions. We see it in 08, after in 09, and basically 2010 through 2019. We saw it after the dot-com bubble in 2002 to 2007. There's a lot of things that the macroeconomic environment is definitely primed and ready to go. I just think that with the amount of stimulus right now, there's no reason to pull your money out. I mean, with interest rates so low, you started talking about the discounted cash flow model. Well, there's obviously the discounted dividend model. You can go look at the DDM and say, okay, well, how much they're paying the dividend? I can see the growth rate here. It doesn't make sense. The valuations really don't make sense at all. And they're starting to rival, if not topping, the dot-com bubble in 01 and 02.
So if you don't mind, I'd love to riff with you a little bit about like the markets right now. And just for people's knowledge, we're recording this on February 1st after market hours. If I say something wrong in the future, you guys can yell at me. I was wrong. There's evidence. But I think what I'm seeing, and things are changing so quickly that by the time this episode goes out in a few days, it may be totally different. But I found myself getting more defensive today. I don't know, Thomas, what you think, but I feel like I'm just seeing these different data points of like these hedge funds pulling money out, selling other stocks, maybe to cover their short positions. and the retailers are pushing that up. And I just feel like there's a reckoning happening. And I was trying to dive into how the clearinghouses work, and the brokers don't seem to have enough capital to put in there. It just seems like there's a lot of potential liquidity issues brewing. And I found myself like hoping that there was a big pop Monday for me to take some cash in some positions, just so my logic was if I miss out on some upside, this is my trading account, by the way, not my long-term investing. I'm fine with that. I just don't want to risk staying in and losing a big chunk if there's another major leg down. But on the other side, and I'll hand it over to you, Thomas, to hear what you think. I still think as long as a couple things don't change, we're still going to keep going higher because you have record low interest rates, almost zero. You have stimulus constantly coming out and printing of money. And then you have the Fed propping up markets in a whole bunch of different ways where like even they're buying corporate bonds, and I think they're buying some corporate equities in some instances. So like how can the market really go down in my mind? Maybe there's a liquidity issue where there's a short-term drop, but otherwise that will probably be a short-lived one. And in the long run, as long as those factors don't change, I don't see anything really keeping the market from going up. What do you think?
I think I agree with you in certain parts. Obviously, we take. Okay, let me preface this. So, the way the world has gone now, and the way the stock market is, we have two things. You have technical analysis, which is looking at charts, looking at price action. What has the stock or what has the index done over the past X amount of days, or X amount of hours, X amount of minutes? And then you have fundamental analysis, which looks at financials. How is the company performing? What are their revenues? What's their profit? What's their CAGR? What's their all these different ratios you can look at. Well, the market is becoming more and more and more, especially when you add retail in this and momentum. I think we're shifting from fundamental to technical. So if you go look at like NEO, right? NEO for the longest time had almost zero revenue. And then all of a sudden they start talking about growth. One of the craziest things I've seen there, they actually had a share offering and said, we are putting more shares into the hands of shareholders and you're buying it from us, which theoretically in stock market theory, that should cause the stock price to go down because you're diluting other shareholders. The stock went up like 8%. And so I honestly think we're in this era of technical analysis is taking over. I think it's more of like, 75% technical analysis, 25 fundamental. If there's no, it doesn't matter what the company makes. I think I'm with you on that. Now in the whole macroeconomic environment, I do think that we are going to see, I wouldn't see a full correction here. I think we're going to see a good drop. Obviously, I look at technicals when looking at SPY. I look at the daily chart, see if it starts trending under the 9 EMA. If it bounces below the 21, that's when I start getting defensive. That's when I'm like, okay, I might put some hedges on here to see how far we go down. Obviously, if you put a hedge on right before the March drop, your hedge hopefully was large enough to cancel out your other losses on your portfolio, obviously. But I think that's usually my approach on it. But I'm never really one of those that tries to, rotate through sectors or change and get defensive. I always have cash on hand, though. I will say that. I will never use a percentage of, or I never use all my cash. I'll take a percentage of a percentage of a percentage so it never gets to zero. But I always have some cash on hand just to keep investing into the dips.
Yeah, same. I think there's an opportunity cost to be fully invested. Even if you don't think cash is really valuable now, if you think it's getting the currency getting devalued, there's still the opportunity cost. Like you want to have cash to capitalize on any dips or any opportunities that come up. So you talked about technical analysis because I remember back when I was first starting, I was working on Wall Street and I had this mentor. I was getting into stocks and he gave me this book. I think it was by John Bogle about index investing, and the whole point of the book was, you can't beat the market. Technical analysis doesn't work. Just buy an index fund. So that was kind of my first real learning and reading into investing. I'm curious, what would you say to people? Obviously, like you just said, now technical analysis is working right now. But for people who are skeptical about that and think, hey, you can't tell anything from the chart. That's just a chart. Like, why is everyone making decisions based on that? It doesn't work. What would you say to that?
Well, first, I think I would say, I think indexing and just buying and holding an index or an ETF technically is using technical analysis. If you go look at all the stocks that are held within your ETF or your index, I guarantee you have high momentum runners. You have, like if you go look at ARK for a good example, their innovation ETF, they have Peloton, they have Tesla. All of those are huge momentum runners. And if you're just indexing or if you're just buying their ETF and holding and you're just like, oh, I'm just going to, that's it type of thing. I'm just going to do that. I'm not going to worry about TA. Well, technically you're investing in technical analysis, and the same thing with indexing, right? It might have some more value stocks in it. So something along the lines of maybe like First Energy or GE or industrials, chemicals, things that really don't move as much as, say, technological companies or high growth like EV sectors, information technology, security, computer science, things like that. That may not move, or those will move more than, say, value names. So I don't think indexing is a bad thing. I think some of the greatest appreciation in capital comes from buying and holding dividends, dividend paying companies. So having a dividend reinvestment plan. So buying, Gilead Sciences with a 5% dividend yield, or maybe even First Energy with a 5 or 6% dividend yield. Buying companies that make sense, that are stable while yet having a good, higher single digit to lower double digit growth rate is not a bad thing. People want these 30, 40, 50, maybe even hundreds percent of growth rates. They're trying to pick the next Tesla. And that's where I think this market's headed is they're trying to pick these penny stocks that don't make any sense. And you see all these penny stocks pumping, and you see these $100 million small caps pumping, because everybody thinks, oh, they're going to be it. They're going to be it. But this company's losing probably, $1 million or $2 million a quarter, and they're not making any revenue. But yet, a good example is Nikola, however you say it, and KLA. They bumped up to $90 a share at one point just because they announced a collaboration with General Motors, which doesn't make any sense logically. If you think about it, they were going to provide some things for each other, but there was no actual incentive for either company to do that because General Motors doesn't need Nikola, and Nikola probably really needs General Motors. But all these investors got hyped up and took the momentum train with technical analysis. Oh, there's a bull flag here. I'm going to buy here. Watch for the breakout. And then another bull flag, then another bull flag. And then it goes parabolic. Well, then you have a TA for parabolic. And so for the people that say technical analysis doesn't work, it works, 90% of the time. Obviously there's ways to play it, right? You wait for the validation point. You wait for it to break out, and then you can get into play. And that's why you see stocks just go berserk when they enter a breakout zone. So I do think index investing is for 95% of investors in the world. Now, if you want to become one of those gurus that want to learn how to trade, it's not a get rich quick scheme. I mean, you have to spend years and years and years and truly losing money to actually understand. Like, it takes a lot of time, patience, and emotional intelligence just to be able to do it.
That's also another common thing I've heard is people blowing their accounts several times before they really learn. And I find, again, this is something I said to Jonte as well, is it seems like people think that it's a get rich quick thing, and they invest, they lose their money, and they give up. And that's why you have these fake stats about, 95% of traders fail. Well, they gave up too soon. It's like, if you want to be a doctor, you got to go through all these years of schooling, and it's not, anybody can take $1,000 and get into the market and be a trader, so-called, right? So I guess, what is your advice? Because there's a lot of new people like entering the market now. Everyone's kind of just running around, throwing money into things that don't make sense, like Dogecoin. What's your advice to people that are getting in now? Like, from the things that you've learned, what are things that people have gotten wrong? Like, any wisdom that you can share with people?
I think the biggest thing is know what you're investing in. So people that just pull up a company, look at their financials for 5 or 6 minutes and say, oh, okay, it looks like they're making money, and then they go invest. That's the wrong way to go about it. That's not the way to do it. You could find a company that's losing money, but you have a very high confidence in because you've been to their stores, right? So the biggest thing I tell people to begin investing with is think of companies you shop with. Think of, if you're a big, NBA fan, look at Nike, look at Under Armour, look at Foot Locker. I mean, look at stocks that you understand. Starbucks, McDonald's. They may not be the highest growth or the prettiest stocks, but there's something that can get you to a different point and level in your understanding of investing and trading, and allows you to see, okay, if I walk into Starbucks and I see it's bumping, and I go to another Starbucks and I see it's bumping as well, and there's a ton of people in it, well, then it's one of those things like, okay, Starbucks must be doing pretty well. Well, then they go read up on Starbucks. Why are they doing well? What type of season is it? And then they read up, right? You doing your due diligence is the biggest thing. Now, if you don't want to deal with that, just buy the S&P 500. Don't deal with it. But if you're like me and you like to pick and choose, and you're like, okay, I don't want to lose out on some returns because I think I can pick better stocks. Well, you can do that. But majority of my holdings and just my personal preference in my 401k and Roth IRA and other investment accounts, I'm just indexing. I am. I mean, I'm not discrediting that. I think indexing is great. I don't have to pick and choose winners. But then there's this other side of me that says, I would love to try and pick the next Tesla, which I said everybody's moving towards. That's what the market's going towards. You just have to be very careful in the way you do it. So some advice would be, don't stress yourself out, number one. Number two, don't try and overload yourself with 12 or 13 different companies. Pick 3 good companies that you can go in. You can tell me in 5 seconds what they do, who they sell to, and what they sell. Where are they making their money? Where do they make most of the revenue from? Is it United States? Is it a multinational corporation? What is it? So just understanding your investments is probably my biggest point of emphasis.
Yeah, I totally agree with you. I think, as I mentioned before, I feel like I'm better at the big picture. So especially in this environment where it's so hard to pick individual companies that are going to do well because there's not really a lot of emphasis on fundamentals. Um, I basically look at the macro picture, and I've read Ray Dalio's A Changing World Order. Thomas, I don't know if you've read that, but I'll link to it in the show notes for everybody else. Where, and I was fortunate to read it, and I basically it clicked with me that there is an inflation environment really brewing. And I was like, okay, so what do I shift my portfolio to in a world of inflation? And I started going more towards things like gold miners, like GDX, and getting into more Bitcoin exposure, real estate stuff, because those to me were inflation hedges. Now, at the same time, like you, I have a IRA and a Roth IRA. One of them, I just really focus on dividend investing. That's it. For people who are curious, there are companies, I think they're called dividend aristocrats or dividend kings, where they've increased their dividends every year for like 30, 40, 50 years. Every year, depression, financial crisis, doesn't matter. So they have a track record of constantly increasing the amount of money they pay out to shareholders. So even if you're getting in now and it's a 5% dividend, theory says is that maybe next year it'll be 6%, 7% on the initial capital that you put in. So that to me was a more less risky way of building cash flow over time. Then I have my macro movements that I do in my other account, and then I have a smaller account for trading. I think people get the wrong impression where they think everyone's putting all their money into trading and going all in on Tesla and becoming rich. I think the smart people really aren't doing that. It's a portion of their portfolio that they're doing it with. And like I said, if I can make 10% a week or 10% a month, that's awesome. Because I remember when it was making 50% a year was great. So what do you think about the strategy, Thomas? Am I way off there?
No, I think you hit the nail on the head. I think people take it the wrong way. You have this new generation of traders saying, hey, I can make $500 if I put $100 in here. Boom. That's why I'm talking about it's coming more into a gambling phase than it is of like, I'm going to think about this trade. I'm going to analyze it. What is my risk to reward? How much am I risking of my account? So say you have $1,000 account and you put $100 into a trade. That's only 10% of your portfolio. That's a pretty good risk adjusted return. If you ask me, if you make 10 to 15% on that, all you really need to do is if you make 10% a day or even 10% a week, that's amazing. They don't understand. Some people don't understand the process of compounding, because if you make $10, or if you make, say, have $1,000 and you make 10%, you have obviously you have 1,000 and whatever it is, 1,100. Well, then when you have 1,100, you make another 10% the next week. It's going to go up farther than that, and then it just compounds, just like dividends. And so you really don't need to knock it out the park every day. You just need to have a consistent, small, $50 to $100 a day. Just have a goal and say, okay, if I can make $100 this week, let's do it. So if you hit your $100 goal, don't try and give it back. Don't try and revenge trade. Don't try and go back in the market and say, I'm going to really risk it now. But protect your capital. That's rule number one. And rule number two is follow rule number one. Never lose money. And that's the biggest thing in trading is I think people have just gotten away from the systemic approach. And I know I've harped upon that, but that's the biggest thing is people are just risking too much money, being stupid with their money, following traders blindly, not doing their own due diligence and looking at the trade and figuring out if it's worth taking.
I'm so glad you said that, because I've literally I'm the weirdo that actually puts together like Excel models, and I'm like, all right, what if I just make 10% a week? This is how much money I start with, and then it's mind blowing how big the account gets, right? If you just make 10% a week or 5% a day, but it's not exciting for people. So I actually may, you know what I'll do? I'll probably put something simple together and put it on the show notes for people to look at and punch their own numbers in. It's mind blowing how much bigger your account can get with those slow and steady, consistent gains, as opposed to trying to go for the 10 baggers that are extremely risky, where you most likely will lose your money. So Thomas, what kind of a trader are you mostly? Are you a swing trader, scalper? What would you qualify yourself as?
Most people in the Discord actually know me as the SPY put king. So SPY could be up, like today it was up a 1.5%. But I played puts. I rarely play calls on SPY. I can name maybe on 5 times I've played calls on SPY. But SPY, for anybody doesn't know, is the ETF for the S&P 500, and no matter what, I play SPY puts. So I'm more of a scalper in that sense. Is I see a weakness in the market, and if that's news, if that's hitting a trend line or something like that, I scalp it in a quick, 5 to 10 minute trade. I can net probably 30 or 40% and then be done for the day. And it takes 5 to 10 minutes. Now, that's not for everybody because you have to have your eyes glued to the screen if you're trading that, or even if it's pre-market or something like that and equity wise. But I'm more of like a get in, get out scalping. And then I do a lot of swing trading and long-term investing. So I like to watch my money work for me. And so I do a lot of investing in dividends or dividend paying companies, like you said, Aristocrats and Kings. And so, like you think of like the Coca-Cola, the McDonald's, the J&J or the Johnson & Johnson, 3M. A lot of those things is what I invested in my long-term portfolio just to accumulate wealth over the long term. But a lot of my trading style has to do with scalping and just looking at the economic sentiment and environment.
I'm curious what you saw today that made you play SPY puts, because I also did the same thing. So I'm just curious if you can explain a little bit about what you saw or what you look for to play SPY puts.
Yeah, so this morning it was actually interesting. I actually will go at bat with some of the other traders in our chat, and they'll be like, "Oh, I'm going on SPY calls." Which obviously, if anybody doesn't know that's watching this, if you play calls, you're hoping the market goes up. If you're playing puts, you hope the market goes down, and so you benefit each way if you think it's going the right way. So I was like, okay, I think this market's going to go down. We saw SPY. One of the easiest ways I can tell you is I watch the pre-level markets of SPY. So in the morning, right as it opens up at my time at 3 a.m. Central Time, SPY will open up. Obviously, based on futures, where it depends where it's at. Well, I chart out 15 minutes before the bell. What are the pre-market highs? What are the pre-market lows? And so obviously today I saw SPY go up, touch the pre-market highs, and it was having some weakness. Some candle wicks formed on the 15-minute chart, and then it started to head back down. I said this is a good point to get puts because I think it's going to continue to go down. And so it did. I played it down to the pre-market lows, made about 40-50%, on investment, a couple $100, which isn't a lot. But as you said, you make a couple $100 a week, then, that's a great side income. So when it hit the pre-market lows, sold. It's just playing levels of resistance and just knowing that I've played it for so long too. I mean, I play SPY almost every single Monday, Wednesday, and Friday. And that's just like my days to play it on. And when it happens, it happens. Sometimes I lose, sometimes I lose. But as long as you take a systemic approach, you have the right risk to reward ratio, and I'm getting out at this position and I'm taking profit at this position, then you know exactly what you can kind of get into and what type of profit you can make, if any.
It's crazy. You said you played Monday, Wednesday, Friday. How often would you say you've been right?
SPY is actually probably, and I don't, not in a bragging term, but SPY is probably my biggest winner, I guess you could say, just because it's so much easier to play. It's so much more predictable because it's 505 stocks being traded versus just one volatile stock. You go play Palantir, you go play Space or Virgin Galactic, you go play something like that. It's going to have a high bid-ask spread, so the candles get real jumpy. But when you add derivatives on top of that, if you're playing options, you have the bid-ask on the options, which can drive up the implied volatility, but you also have the bid-ask on the stock. So the option is deriving its value on the equity, but you also have to take into note of the bid-ask spread on the option or the derivative. And so when you add that in, then it can cause it to be overinflated. Even if you're right and it goes down, you can still lose money with the deflation in IV. And so, most of the time when you're right, 80%, I mean, that's a good win rate. 70 to 80% is good because obviously if I get a 2-to-1 risk to ratio or 2-to-1 reward to risk, obviously I can make twice as much as I would lose. So I only have to win one every 2 times to make a profit or to even break even. So if you do more than that, then you're going to make money.
It's interesting to me because it feels like it might be like a self-fulfilling prophecy where, like the way you outlined what you do, the pre-market level, the highs, the lows, I do the same thing. So I wonder how many people are doing the same thing. Maybe that's why technical analysis works. Everybody's looking at the same pattern. If everyone sees that bull flag and starts acting on it or whatever pattern that they see, it may be like a self-fulfilling thing where it causes it to happen.
It is. And I think that's the drive we see in technical analysis. There's been this explosion of, hey, I'm going to chart. I'm going to figure out what the heck's going on in this stock. I'm going to see what it is. Obviously you said, if you see a bull flag, people say, oh, it's a bull flag. The stock's going to continue to go up. So they buy it. They buy it right then and there. And then obviously the more and more people that can recognize a bull flag, the more true it will become, the higher and higher win rate it will have. And that's just I wouldn't say a prophecy, but that's my vision of the stock market in the future is it's going to become like a 95% technical analysis to like 5% fundamental. Now, I think fundamentals are important in choosing the companies you do, right? Because if you're getting in and out of a trade within minutes or even a day or two, the current ratio really doesn't matter, or like the risk of bankruptcy doesn't matter, because the chance of that company going bankrupt in like a day or two when you're holding that trade is very, very low. Now, when you start swing trading and you're holding long-term investments, that's where more fundamentals come into play. But just because you have a fundamental investment doesn't mean people aren't using TA on it or using technical analysis, because as you said, it's like a feedback loop. It's when more and more people know what it is, the more right it's going to be. And then the more right it's be, the more people are going to recognize, well, hey, this pattern works more than these other patterns, and more people are going to hop on the train. And so it's just a positive feedback loop that will continue on and on and on until a decoupling in the system comes.
I don't know, Thomas. You said it's unlikely. It is unlikely, but I've had it happen to me. Maybe I'm just. I remember, like a few weeks ago, I think AMD. I literally like clicked to enter AMD, and like as soon as I entered, Microsoft announced they're doing their own chips, and the stock tanked. I don't know if you remember that day.
I do
I was like,
that day.
that is just really bad luck. So it could happen.
No, it could happen. Obviously, bankruptcy, but yeah, you also have to watch out for news, and that's the biggest thing in this environment, especially with the COVID thing. Man, there could be a piece of news that came out in April or June, and that was a very volatile market. And obviously, we bounced in early April, late March, early April. But any piece of news of COVID deaths or cases rising would send the market just crazy. I mean, it just becomes super volatile. Any type of Fed movement, any type of FOMC meetings, and it just gets super volatile. I mean, you could see a % or 2 move in a 1 minute candle, which is just unheard of for SPY or the S&P. So yeah, it's a definitely news driven market with technical analysis leading the way, but news is definitely another big factor.
So it sounds obviously you, Jonte, and another partner, Tom, co-founded the Financial Cloud. Maybe we'll get Tom on here next as well. Get the whole leadership team talking about stocks. Can you tell us a little bit about what it is and why you guys started it? Because I think it's pretty cool. There's like thousands of traders following you guys. You guys clearly know. I mean, anyone that listens to this conversation can tell you clearly know what you're talking about. So tell us about like the story behind Financial Cloud. Why'd you start it? What's it about? How'd you meet the partners? Stuff like that.
Absolutely. So it actually started as a newsletter idea. So Tom and I had been friends for 3 or 4 years on these Discord groups, and that's where I met him, was in that first server I was in. We became good friends because we obviously have the same name. His name's Thomas, but he goes by Tom, and I'm just Thomas, and I go by Thomas. And we hit it off, and we were like, man, this would be so interesting to start a business in the sense of the stock market. And we just kept brainstorming, and we got invited to new Discord servers to be like these air quote experienced traders, to where people would want to let us put charts out and let us see what we had to say about the stock market and technical analysis. Well, I told Tom, I said, hey, man, I love to write and read. Like, let's put out a newsletter every single week. Let's send out some stock picks. There's a lot of other people doing it, but I think we had the following to do it. So we started doing that. And then the Financial Cloud actually started as a newsletter company. And then actually just today was our launch day for our software plans too. So we transitioned over our newsletter, and we have a lot of software. So Tom has been instrumental in with the coders that we have. Shout out to all of them. I mean, they've built our entire server. They've built all the software that we have that has artificial intelligence, flow bots, on-demand flow bots. We have a Super Fortuna, which is our own indicator, stock market indicator, which has 100% win rate. We have those flow alerts that I was talking about, level 1 through 5s, which have a win rate of like 93 to 94%. So we have some insane stuff, and obviously I think a lot of people are like, well, that's just that's software. I think I would trust software more than a human being with their emotions. Well, that's what we tried to do with the Financial Cloud, was say, we have a newsletter on Sundays. This is all handpicked by, his name's ATM or Avery, and we have Hasib or Airdrake, and those two and Tom will all make stock market picks. They'll say, hey, this is what the chart's doing. This is what I think could happen. And obviously, this is not financial advice. We say, take it at your own risk. It's just a disclaimer. But we decided to do that and then switch to software, and now we're doing both. And so we really just wanted to create, our slogan is independent thinkers but shared success, or independent traders and shared success. We really just wanted to harp upon not being a sheep, not being someone that just blindly follows somebody else's call outs. We want you to learn for yourself, learn derivatives, learn options, learn how the stock market works, what's a bid-ask spread, what's a margin account, cash account. Just really understanding the ins and outs before you just go ask all these questions and you go in and say, I don't know what I'm doing, but I'm going to throw 100 grand at it. We don't want that. We want somebody that cares about their knowledge, cares about their well-being in the financial markets, and wants to create a better financial freedom for them.
Yeah, I'm familiar with ATM too. I'm a fan of his. I didn't know he was involved with you guys as well. That's awesome. I'll link to his Twitter in the show notes, everybody else as well. Well, you mentioned some incredible stats, like 100% win rate, 94%. Like, to someone listening, that's like, come on, Thomas, really? 100% win rate? That's skeptical, that thinks like it sounds fancy, an algorithm that does this. Like, how do you address the skeptics? Because I've heard people rave about Super Fortuna, like, and I've heard the same thing. It's never been wrong. So how is that possible? And how do you measure that?
So we measure it based on share percentage move after. So we don't even get into the derivative side. We just say basically solely on equity prices after that. So we take a 7-day average, we take a 10-day average, then we take a 30-day average. And so on our flow alerts, we had like a 93% win rate. If you held the stock, or if you held the option or stock from between 1% or from the day of that the alert is given to 7 days out, you would have a 93% win rate. So when we came out with Super Fortuna, Tom has been he has a crazy mind. He can come up with brand new things, and he's always a visionary, and he's always dreaming. So he said, let's come up with an indicator that will basically call out market sentiment. And so Super Fortuna has been wrong 0% of the time. And every single time it's had a call out, it's been at least a 40% gain on an option, right? So I think if you're listening to this is February 1st, like we talked about. The day before this was a weekend, or the weekend before this, on Friday, Super Fortuna called out and said, hey, I'm bullish on SPY. It said, grab some calls. And so everybody was skeptical when we opened up down. Futures were down probably 120 basis points, something crazy like that. And then we wake up this morning and SPY ends the day at 140 basis points up. So it's a 1.4% upwards. And people are like, man, Super Fortuna is crazy. Like, how does it know that? Honestly, I can't tell you how it knows that. I'm not in the weeds on that, but there's such a strict parameters around it. And to the skeptics, I don't know what to tell you besides it hasn't been wrong. Ask any of our 5,000 members in our Discord group or any of our 1,000 subscribers. Just ask them. I mean, they will tell you that it's been right every single time. Now, obviously, there's going to come a time where it may be wrong. That's just part of statistics. But I mean, even then, in 98 to 100% win rate, you really can't find that anywhere else.
Have you guys thought about like pooling capital together and investing it based on the AI for yourself, like kind of like a hedge fund kind of thing?
We have thought about that. There's a lot of legal issues, a lot of regulatory issues we have to get into. I think we're just kind of focusing on providing value and education to our members. I think that was our sole goal and our mission statement in the company, was to just create these people that are truly wanting to know more and wanting to yearn for more knowledge and more experience in this. And that's what we're focusing on. And then if we ever get to the point where we're big enough to do that, then I think we'll explore the option. But I don't think right now that's on the table.
What do you think about like? I know the market's huge. There's a ton of money flowing through, but I've noticed when you get a big enough audience of people following your calls, like for example, you probably know Trader Stewie on Twitter. Every time he makes a call, like immediately the stock goes up because everyone just kind of follows him and jumps into it right away. Do you think we're getting into like questionable territory where you may accumulate 50,000 traders that are following you? As soon as you make a call, it's easy to manipulate the market and cash out, or I don't know. I don't even know what I'm asking, but I feel like I've seen that. I'm like, man, if I had that kind of following, it'd be easy to make money.
Yeah, I mean, if you go look on Twitter, there's plenty of people that are, I wouldn't call them pump and dumps. I mean, because they're not doing anything illegal. They've obviously read the laws. We have a lawyer friend of ours that's in the Discord, and it's a very fine line of where you get into the point of, is it illegal or is it not illegal to call out a stock? Now, if you're calling out a stock just for no apparent reason and there's no support behind it, then there may be like in the effect and like you wanting it to gain share and you're actually wanting to dump your shares at a higher percentage, then yeah, that might be illegal. It probably is illegal. But I know what you're saying when you see Twitter people saying, okay, go buy this stock, especially like we see with the Wall Street bets, right? We see everybody pumping AMC, pumping BlackBerry, pumping Nokia, random stocks that have nothing to do besides they have a little bit of a short interest. Everybody's pumping it. So I don't know. That's going to be a very tricky rodeo for the Fed and the SEC to kind of navigate, especially for the Biden administration. Something that they're definitely going to have to keep on track. And I do think there are going to be regulatory pressures coming down. The SEC said they're going to be investigating both sides, retail and hedge funds and market makers, to see, if there was any wrongdoing, if there's going to be any, penalties behind that or fines. I don't know. Usually people just get a slap on the wrist for that type of stuff and fine them, $1 million or $2 for hedge funds, but that's nothing for them. So I really don't know. But early in the show you referenced the brokerages having a liquidity problem. That's a big problem too. They have to have as much capital, especially when the regulatory agencies say you have to hold as much capital as your shareholders trade or as much as your users trade. Well, when every single millennial just downloaded Robinhood to join this hold the line movement and buy AMC and GameStop, it just caused them to have a ton of liquidity problems and restrict it. And then that just made the problem exponentially worse. And so you get into this again, like a feedback loop of just something's going to happen, something's going to blow. You've seen the GameStop and the AMC things affecting the market and impacting the market. And just because all the money, the retail money was flowing to AMC and GME, it wasn't flowing to the index funds. And you can go check the data on that. So, I mean, there is just a whirlwind of emotions and whirlwind of things going on right now in the market. But eventually I do think it'll calm down with either fines or penalties or maybe just a slap on the wrist. I don't know.
Yeah, I feel like I got a little bit of a controversial view with the whole Robinhood and broker thing. I get that. Like, you can't get away from this. Like, I went to get a haircut with my barber yesterday, and as soon as I walked in, he's like, "Hey, what's going on with these guys trying to stick it to the little guy?" And I'm like, I get it. The story looks very bad. It definitely looks like they're taking advantage of the retail trader and helping the big Wall Street guys. And I would say that they are benefiting the Wall Street guys. I'm not denying that. But if you look at what is really happening, there's really a liquidity problem when everyone's buying all these stocks on Robinhood and they don't have the capital to put into the clearinghouse. What are they supposed to do? Right. So I don't think it was a motivation of trying to stick it to the little guy. I think it was a survival thing where they had to do something because they don't have capital. And I think you just saw today and on Friday, they were raising a bunch of capital and loosening the restrictions. So I feel like maybe once, I think tomorrow, Tuesday, the trades from last week settle, you'll start to see more things, more of those restrictions loosening because they got more capital as well. I don't think that they relished being in that role. I don't think that that's what they wanted to do. I think they had to do it. But yeah, it helped those big Wall Street guys, I would say. Do you have any thoughts on that, Tom? Am I wrong?
No, I think you hit the nail on the head again. I think that's exactly right. That obviously emotions run high, and people just want to blame the first person they see, and obviously that was Robinhood. But I mean, you got to go look at it. There were other brokerages that did it. There were other brokerages that restricted trading, and obviously it was the clearinghouses, and for more explicitly, it was Apex Clearinghouse that did that. So Webull, Robinhood, a lot of the other brokerages, and so obviously Webull corrected the situation after 2 or 3 hours, where Robinhood kept putting on restrictions. And so that really does tell the story of which broker is, I wouldn't say better, but I prefer a Webull over Robinhood just because the interface is better. And actually after the whole Robinhood fiasco, even if it wasn't their fault, Webull saw like a quintupling of their account signups just because of that. The whole boycott Robinhood, cancel Robinhood. So even if it wasn't their fault, Robinhood's taken the blame for it. It took them 7 or 8 years to build the brand, and it fell in one day.
I definitely congratulate you guys on starting the financial cloud or at least launching the software portion today. I think anyone listening that's remotely interested in the market, which I would say probably everybody is, you should definitely check them out. At the very least, you can join the Discord group and get in the community and see what people are talking about. So I'll link to all that stuff in the show notes. But I do have a few other questions, Thomas. If you don't, I like to wrap these shows up with the same kind of questions. But first, do you have any thoughts on crypto as a macro guy? Like, what do you think about Bitcoin and stuff like that?
Yeah, I think obviously the crypto in our group of traders on our team at TFC is definitely Jonte. Jonte is more of the crypto head. I mean, he in his episode he talked about it was. I know we've referenced him like 4 times, but the man keeps coming up. He referenced crypto from being like 14, 15 years old. He had a passion for business and then eventually got into crypto trading. I don't necessarily do crypto trading. I'll take opportunities in the market. So like Dogecoin that the other day. Put $100 in, makes like $70 off of it. I'm not going to risk a major capital. I'm not going to invest in cryptocurrency. I just personally don't see Bitcoin. I don't see Bitcoin being used for its original purpose. Its original purpose was for currency. But how can a currency fluctuate that much? And I know everybody has a different opinion on it, but it has no value besides the blockchain. And so I think there are other cryptocurrencies, maybe like Ethereum, that have probably a better chance of making it. But that being said, I'm not invested in any crypto.
What do you think about and we don't have to get into this whole debate. I'm just curious, like, what about the whole store of value concept? Like, it doesn't have to be a currency. If all these wealthy institutions, these central banks, these governments, these billionaires are using it as a store of value, eventually the volatility will decrease. and it would be a sustainable store of value. What do you think about that?
I think that's possible for sure. But, again, I'm not a crypto guy. I don't necessarily delve into these topics. Um, I like to have an asset that will pay me. So dividends, if that's a REIT or a REIT, real estate investment trust or a dividend paying company. Those are the companies I like to own because most capital appreciation comes that way, and then reinvesting the dividends. So that I'm not necessarily a big crypto guy, but I would direct all questions to Jonte.
Um, no, I appreciate that, and it's there's so many different aspects of like trading and investing that everyone's got their own lane. So it's really a benefit to know like what your thing is and what your thing is not. So I definitely appreciate that. Are you concerned at all like, with your dividend investments, your index funds? Um, are you concerned about inflation or the currency devaluing with all this money printing, or do you think that that would benefit you?
No, I do think there's concern. Obviously, inflation is going to be running high. We're probably going to see it around 5 to 7% in the coming years. I mean, that's just based off a 0% interest rate, and then pumping, 30% of all the money that's ever been printed has been printed in the past year and a half. So that's scary for sure. And then also you add that to the national deficit and our debt. Then you start getting some weird numbers that do not look good, and they're kind of contrarian. But I'm not necessarily concerned because if you find the right business, they're going to outperform the market. You find the right business. So, I mean, that's something that Warren Buffett's always said. And I take a lot of my sayings and wisdom from him is if you find a company, and he's referencing more of like See's Candy or even like Geico, he bought all this stuff. And through the recessions, they've still outperformed because it's a business that's going to stick around. They have a sustainable competitive advantage in their industry and they can utilize it. So like Coca-Cola, that's not going anywhere, right? They're still going to pay a hefty dividend. Now, their growth is not going to be there, but necessarily you could find high growth, high dividend plans or high growth, high dividend companies that you can invest in that necessarily won't increase your risk for losing out on potential gains, especially when inflation is going to be that high. And that, if you think about like my grandparents, they're asking me, hey, the interest rates are literally zero and CDs are 60 to 70 basis points. Where can we invest our money? There's no good place. I mean, we have to wait for yields to tick back up to kind of put a X amount of dollars in a bank account here, X amount of dollars in a CD, just to take a percentage of that and just to even have a remote chance of even coming close to beating inflation. And so that's going to be a huge problem for my generation. I mean, I'm 23. I'm not really worried. Almost all my money is in stocks, probably, because I'm not really worried. I have to beat inflation somehow. But for those elderly generations, where do they put their money in? Because it is technically, 0% bond yields or 0% interest rates and bond yields are super low. What do you do? I don't know. That's the generational question.
Yeah, I mean, I think you just man, you just like hooked onto the main point in my view. Like with all my friends around me, I give the same advice. I think Ray Dalio first said it: "Cash is trash," and people kind of laughed at him. But you just hit on it where you said, "Where are you going to put your money?" Right. So in a world with low rates, with inflation being high, all these wealthy people, all these people with money that have to invest, where are they going to put it? If you put it in the bank, you're going to lose value. So they're kind of forced to invest in the stock market, and that's what's kind of feeding this frenzy. And I don't see it stopping because, as like the factors that I mentioned, the interest rate, the inflation, and the Fed printing money. If those don't change, I don't see it changing. And you even see it. Uh, I'm always skeptical about the inflation rate, the official inflation rate, because to me it's a little bit manipulated, where they don't include things that are really inflating. Like it's still under 2% the inflation rate, but they're not including real estate or they're not including equities
Yeah.
or stuff like that. And that's where you see if you like Google the Cantillon effect, that's where all the new money is flowing. So to me, it's a much higher inflation rate, and that's why you see even like like Pokemon cards and Magic the Gathering and sports cards, even they're booming because pretty much owning anything other than cash is better than holding cash. I could be wrong. What do I know? But that's just my opinion.
I agree with you. I mean, if you actually go and dig deep into economic indicators, if you go look at the core PCE or even just the core PPI, just the core inflation, they exclude gas and food. Well, those are the two of the most highly sensitive to inflation. Like, why would we not be including that? And I think they don't want it to fluctuate too much. The same thing with the unemployment rate and the labor rate in the labor market. The unemployment rate is not the official unemployment rate because it doesn't include people that that could not find a job or are not looking for a job, but still don't have a job. And so there's all these like little tweaks that they make to make it look better. And I mean, I don't know if that's just the government or if that's just trying to make the presidency look good. I don't know. But you always
No, you're exactly right. And my personal opinion is that I think it's because they have to, because a lot of things are based on like the CPI. If you've got a job, you get an cost of living raise adjustment, or a lot of things are kind of piggybacked on that CPI number. So they manipulate it to keep it lower, to not have a domino effect that like spreads throughout everywhere else. At least that's my theory. I don't know.
Yeah, that could be true. I wish people pay more attention to the true inflation rate than the one that's altered. Is my only thing.
I'm totally with you on that one. Man, I love getting into the nitty gritty with you on this conversation. I hope people find it valuable. But there's two last things that I ask everybody. So Thomas, if I interviewed people around you at a young age, we kind of talked about a few stories about you at a younger age, being different, doing things that most people weren't doing. What would people say about you? Like, if I talked to them, would they say, hey, this kid was destined to be successful? Like, we always knew it. He always had it in him, or would they say something else?
Yeah, I mean, I think it really depends who you ask. I mean, obviously, people close to me are probably like, oh, yeah, he'll be successful. I mean, just out of the curiosity and the generosity of their heart. But I think, most people when I grew up in high school didn't have a lot of friends, didn't really care for that type of stuff. As I mentioned, I didn't really care what people think about me. I still don't really care what people think about me. But I don't really think it matters if they can think I can make it, if that makes any sense. If I know I can make it and I know I can do it, like starting my own business, and if somebody says, oh, that's awesome, or, very sarcastic, like, okay, go have fun with your business, I'll be like, I will. I mean, that's what I enjoy doing. You go have fun with your day too. So I don't think it's a negative thing when people think that I can't do it, because even if they say I can't do it, I'll be like, all right, watch, and I'll show them. I mean, that's just how I am. I'll put my head down. I'll keep pushing through like everything in my life. I'll just break through the wall and break another barrier.
That's a great answer. And we talked about a lot of different things. Obviously, you have a different perspective than most people probably at your age. But I ask everybody, like, obviously, a rich life is not just about money. So when people see the podcast title, Bound to be Rich, they think, oh, this is just about money. It's not just about money. So I guess from everything that you've been through, from what you've seen, what you've learned, what is a rich life to you?
To be honest, I would give up every single thing I know about the stock market, about finances, about everything. If I could live a simple life with my wife and our future kids and our future families and our families now, and just live a very, very meaningful life without any materialistic. If you ask anybody I know, I'm not materialistic. Hey, what do you want for your birthday? I don't care. I don't want anything. I just want to spend time with you. That is my biggest thing. I enjoy spending time because we only have a limited amount. And if you know in economics, if you have a limited amount, then it's much more valuable. It's much more valuable. And so people need to realize that in life is you can spend years and years and years building for something, and then always realize that you just wasted your entire life not spending with your family and your friends. You're not taking time away to spend it with whatever, focusing on something else. So I think the biggest thing is just making sure that you're not focusing on the materialistic things, but you're focusing on what's above and what's ahead.
Awesome, Thomas. I really appreciate you coming on. I personally really enjoyed the conversation. Hopefully people get a lot of value out of it. We got to nerd out a little bit about some in-depth stuff about economics. Is there anything that you want to end the show with? Anything you want to pass people off to? Any parting words?
So yeah, I think the biggest thing I would end with is just making yourself the best person possible, and keep pushing, keep grinding, and get better every single day, even if it's only 1%.
Thomas, man, thank you so much for coming on. I really appreciate it.
Yeah, absolutely. Thank you for having me.
And there you have it. If you enjoyed this episode, please remember to leave a review. I may even give you a shout out and read yours out on the show. For any and all resources that we discussed, check out the show notes or head on over to boundtoberich.com. Until next time.